Okay. Burner Market Trading Group. This is I Can't Wait for It. And today we'll be covering Heikin Ashi Charts with our indicators part 2. All right. So, how do we get these on our charts? Why do I want them on my charts? Well, it's easier to identify trends whenever you have Heikin Ashi charts up. It's just the way that they're designed. And so I'll show you how to get them on there, and then I'll try to explain why, how it works. Um, what you do is you go into the top right corner of your screen here, you hit style, you come down about halfway and it says chart type. Normally it says candle. If you go down about midway, it says Heikinashi, you click that and boom, you're done. Not hard. So how do they calculate them? Well, this formula right here pretty much breaks it down. But to sum it up, if you don't want to read all that and or you get confused reading that and it gives you a headache, which it does me. Whoa, that's a little bit too tight. The way it's designed is basically it's taking the midway point of this candle right here, or the body of that candle right there, and it's drawing a line straight out, and that's where the next candle starts. And so then, as long as it's a downtrend, it keeps printing candles going down this way and it holds that color. So now the other line that it makes is basically connecting the corners of these candles. And so as long as it doesn't break here, and of course this changes there as it gets further down, but as long as it doesn't break, I guess something like this. I'm not really exactly sure. It's a calculation, but you get the idea. As long as it doesn't break that trend line right there, it's going to stay red. And then when it does, look, boom, it turns green. And so that's how they keep all the candles going red. Basically, its formula says if candle doesn't break X amount, this trend line, blah, 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 and start next candle at the midway point here, printing down, going to be red. If it goes past the trend line going up, then it's going to be green. And so some of the rules on how you read this are if you got a solid red candle, that is an indication of a strong trend going down. And also, if you have no wicks on the top side, that means it's very bearish and it's also a strong trend going down. Now, once you do get a wick on the top, that is a strong indication that your trend is about to change. And so then, boom, all of a sudden you got green candles going up. Now, there is a green wick right there, and so it's not always going to be true, but for the most part, you can look at it and say, that's probably still going up. Now, what you also notice is that the green candles are hollow on the inside, and so that means it's a good indication of it's a bullish trend going up. And you have no wicks on the bottom side. Now, when you do get a wick on the bottom side, it means that your trend could be running out of steam, but in this case, it just continues on. And so if you move up, out of here. We got two red candles right there, wick on the top and bottom of that one, wick on the bottom, and then boom, you got more green candles. You got wicks on both sides in there. So here's what happens. Look, you've got no wicks on this set of candles here. You get to these two red candles that come down, and the first green candle you get is an indecision with wicks on both sides. And then guess what? Your price action kind of goes sideways. It still goes up a little bit, but it's going sideways. So it gets up to these next two red candles, and you get another indecision that follows that red candle, a small sideways action green candle there, another green indecision. So you basically got doji, small green candle doji, and it goes right into a downtrend. And you have no wicks on the top side until you get about here. And then it starts to go sideways again. And yeah, the bottom ends do go a little bit deeper or whatever, whatnot, but it's still kind of going sideways. It's consolidation. And then, so you got wicks on both sides, and then it instantly goes back into an uptrend, no wicks on the bottom side. And so that's the way that you read these is you just look at it and say, well, does it have, if it's a bearish trend, there shouldn't be any wicks on the top side, but if there are, it's most likely going to change directions if they're continuously printing red candles with wicks on the top side. And so then it does eventually go into a bullish trend, and it has no wicks on the bottom side. So if it's a bullish trend, no wicks on the bottom side until you see a wick on the bottom side, then you're saying, okay, well, it's probably going to go down from here or sideways, and which it does. It goes sideways, prints another green candle, does a doji with the wicks on both sides, another red candle, another doji, and then boom, it goes down. And so then you get a wick on the both sides right there, and boom, it goes up. And wicks on the both sides, and boom, it goes down, wicks on the both sides, boom, it goes up, wicks on the both sides, continues going up, but then reverses, it goes down to later. And so another rule is that if you see a big doji at the top or the bottom of the trend, so like when you look at the Bollinger Bands and you see a doji with a wick on both sides, most likely going to go in the other direction. So that's another way to look at it there. Look, price action coming down, no wicks on the top side. Boom, you got a big doji with long wicks touching the Bollinger Band. That's likely going to go the other way. And right here, green action going up. And you get to the top Bollinger Band, no wicks on the bottom side. Till you get to this one, you got a wick on the bottom side, and you got one that's almost touching the top Bollinger Band there. So therefore, most likely going in the other direction. Boom, comes down, you know, and so on and so forth. Sideways action comes down more. And so that's how you read Heikin Ashi candles. It's not super hard. They're very useful when you're, especially if you're day trading and you're trying to, find a place to get in. These are really good pivot points. You combine that with a couple of other things, and you probably have a winning strategy there. So, I mean, if you look here, this bottoms out, this volume accumulator, which I talked in one of the previous parts or series, it comes down, bottoms down right here, and you got red dojis, and then it starts going up again. You have one, let's see, you've got the volume indicator topping out right here, and you got the doji with the red on both sides. Double indication that this trend's changing. It was going down, now it's going up. Right after that. Bottoms out right here, and immediately starts going down. Boom. Bottoms out right there, and the trend ends. So it's coming down, and you see it bottom out. And then, there are no wicks on the top side, but it's a very strong red candle down. So it's a very good indication that one, it broke the Bollinger Band there, and it's bigger than all the other candles, which that means it's probably institutional buying, which means that this move is probably about done. You get the next candle, which is half the size, and you get the next candle, which is a quarter of that size, and it's not touching the Bollinger Band anymore. Most likely, it's probably going to start going up. So then you get a little bit of movement going up. You got a lot of indecision here, so of course that says it's going to go sideways forever, and you follow it sideways. It gets over here and it starts to go red. Now you got a red one here, which is different from these other red ones because you have another red one with no wick on top side on both of these following back to back, which means that now you're back into a downtrend. Boom. And you go down. And same thing. No wicks on the top side. You get one right there touching the Bollinger Band, most likely going to start going up. You get one with no wick there. Comes down a little bit further, you get another indecision candle with wicks on both sides and touching the Bollinger Band, and then the next one is the change of color, which ends up being a green doji. So now you got two indecision candles, both with wicks on both sides, and a color change. Probably gonna go up, and you come over, you got indecision, 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 and then it goes red candle, going down, well, with no wick on top, but a much stronger candle, bearish engulfing. It's bigger than all, it could eat all these other candles going this way. And then you get another one right next to it, and it's probably going to go down. And then it goes down. And then now you've got them printing outside of the Bollinger Band here, coming down, each getting smaller, and then you get this guy right here that goes in the opposite direction. It has no wick on the bottom side, probably going up. So that is how you read a Heikin Ashi chart. Hopefully that was helpful. Got any questions, put them in the comments below, and I will see you on the next one.